everyone, my name is Jeroen van Zanten. I am the head of marketing and growth of Boulder Group, being based in the Netherlands. Well, as an organization, we're heavily involved with a lot of crypto managers that are establishing entities and funds with the organization as we invest in cryptocurrencies. And as such, we are very, interested in all kind of regulatory restrictions that might impose our clients doing business. So it's essential that we follow all latest regulation. And, as cryptocurrencies and other digital assets become more prominent in the financial landscape, the European Union has introduced the so-called DAC 8 legislation as to increase transparency and combat tax fraud. Organizations that are active in the sector, like the Boulder Group, we need to not only protect our clients, the investors, but also ourselves, to ensure that we are all ready for this new DAC 8 legislation. The cryptocurrencies and decentralized finance, the so-called DeFi's, is some sort of, how shall I explain this? A blockchain-based form of finance that bypasses central financial intermediaries like banks. And, they have been making headlines, as we speak, because look at the Bitcoin, going to tremendous heights and to tremendous lows. The Bitcoin then first, increased with 100%, now it's 40% lower. I think the current value is below $40,000. Or look at a country like El Salvador that was, trying to make the cryptocurrency as its legal tender, but are now heavily criticized by the IMF. And it looks like there is a new story every day. And it makes sense because if you look at the crypto industry as in total, it's worth over a couple of trillion, I believe $2 trillion or something from the latest information we as Boulder received. And, as the cryptocurrencies and digital assets move towards the mainstream in our post-pandemic world, there are a lot of questions, around the application of taxes, and with concerns that the absence of a clear taxation framework for such assets will fuel risks, market volatility, and unfair tax competition between different jurisdictions. And hence, there is therefore this need to actually regulate crypto assets and cryptocurrencies. We all read the newspapers, we all get all these notifications in our inboxes and on social media. There have been tremendous lot of efforts by both the global and European, legislative authorities to better monitor the transactions, involving crypto assets, and then to implement, so-called AML, anti-money laundering screening. For example, in 2015 and a couple of years later, the FATF, which is the Financial Action Task Force, it updated its guidance for a risk-based approach to virtual assets and virtual asset providers, service providers, like the trading platforms, by amending the recommendations, of the FATF and introduce definitions, that really, focus on, let's say the service providers and making sure that they adhere to rules set locally. And the FATF, they published the new update, I believe, a year ago in March, has suggested adopting, approaches to the one applied in traditional finance, such as the mandating of KYC and AML laws. So you will see that on a global, European, but also on a local level, new laws are either in preparation or being implemented as we speak. Well, first, the union spent a lot of time talking, how to tackle, because this is an interesting phenomenon, because it looks like economics and economic reality is far ahead, and that legislation is trying to catch up. So this is an interesting game we're seeing. But, in general, the EU level, at the EU level, We've had the fifth anti-money laundering directive, but it doesn't refer to virtual assets directly, more to virtual currencies, like Ethereum or Bitcoin. And they're trying to adopting a narrow definition, but still, they haven't been able to really focus on the real issues. So the proposal for an EU regulation on markets in crypto assets was published, and I believe that's called the Regulation on Markets in Crypto Assets. It's known as MiCA, M-I-C-A. It was published, I believe, the end of 2020, and it does include at least a definition of crypto assets, which are described as a digital representation of value or rights, which may be transferred and stored electronically using distributed ledger technology or similar technology. And fact is that the real issue at present is that that each EU member state applies different rules or has no rules at all. So when it comes to crypto assets and paying taxes or disclosing ownership, we have a problem because there is still no harmonized approach, and that's they're trying to tackle. And this results in a risk of unreporting of taxable income, leading to revenue losses, for these governments. And worried, a lot of the EU, the central body is worried about this, and and that there is this lack of transparency, that there is a lack of AML control. And that's why the EU Commission has decided, recently in the last year to take much firmer action, and hence, let's say, the plans for DAC 8. It's another big framework, as I indicated, that the EU Commission is trying to launch. And actually, they started with this a year or two ago. And in last year, I believe Q1, the end of Q1, the EU Commission launched a public consultation letter, and it was aimed at strengthening the rules on administrative cooperation and expanding the exchange of information regarding e-money and crypto assets. And the findings from this public consultation, which is, which is finalized, will provide a new update to the Directive on Administrative Cooperation, on this DAC, this DAC 8, as it's known. And it will be much broader than the current or, lacking, harmonized EU regulation, and will provide each and every country and financial authority new options of taking action against, fraudulous tax evasion, and AML, let's say, acts. And people expect that this DAC 8 will be implemented within a year and a half tops. And this consultation was required because, regulating, a dynamic environment, means that you need a thorough mapping of stakeholders to understand exactly, what is involved, what kind of activities are carried out, and how the member states are currently qualifying crypto assets, to apply the relevant tax provisions. So, the consultation, took quite some time, and it went deeply into the crypto system, trying to understand and collect important information, also with respect to the type of crypto asset service providers. Are those providers licensed or registered? What amount has been invested? And what is the tax residency of the crypto asset service provider? Which jurisdictions are they located? But it also covered reporting obligations on crypto asset providers. And if I look now, as Boulder, if we look, okay, what is the current situation in the EU countries? Some EU countries have already imposed or are planning to impose, reporting obligations on crypto asset service providers. But again, this report and these findings, it may also lead to extra administrative burden, for these crypto assets and e-money service providers. So this is an important thing to monitor, as a fund administrator of a lot of crypto investors and crypto traders. And the EU Commission also asked interested parties where they think that crypto asset service providers should be subject to reporting obligations, like other financial institutions, where the same reporting obligation for tax purpose should be adopted throughout the EU. And what will be the main challenges, that we would have? It is still an ongoing process. Consultation is closed, but ultimately the goal really is to, let's say, to limit to the possibilities to take advantage of particular potential loopholes, and also trying to avoid potential harm, to innovation, but because we don't want to impose too many burden or newly created or small businesses in terms of compliance. So it's a thin line, the European countries are working on. I don't have a crystal ball, unfortunately, but as our company is active in this industry, we pick up, let's say, signals. We speak with professionals that are heavily involved in this industry and are following this cautiously. And we cannot ignore, no one can ignore that the crypto asset has become a global phenomenon. And I think it's good that that if the authorities at an international or in this case EU level can combine and come up with transparent rules about reporting, what are the rules that crypto assets and crypto service providers need to adhere by. And I think that DAC 8 will need to ensure a comprehensive and coordinated approach that will encompass all the involved actors, whose roles in facilitating crypto asset exchange has already been considered, in the 5th AML money laundering directive and other proposals, and the use of public consultations, that, as I just spoke about for DAC 8, reveals a growing awareness, by legislators and regulators that they need to engage with the stakeholders, active in this field, in this evolving ecosystem in order to apply the appropriate level of regulation. And so, as mentioned, I think the DAC 8 will be implemented between the next 12 to 18 months, and it will have an impact, on crypto asset owners, corporations, individuals, investors, fund managers, crypto asset creators and distributors, but also on us, being an administrator. So we need to be very much aware of what's going on. And it will mean, quite some additional regulatory requirements and potentially more administrative burden with respect to KYC and reporting, requirements. So it's imperative that for, that any individual or company, involved in this industry will check their upcoming obligations and under DAC 8 and then prepare, to implement a process to collate and report the required data. And I think here, as Boulder Group, we can play a very important role by assisting, our clients active in this industry, navigating, this immense, complex, regulatory field of new laws and regulations. And at Boulder, you will be at the right address, for appropriate solutions and administrative assistance. Thank you.